Hey everybody, it's Brian. Thanks for joining me. We're back for our next lesson where today we're going to talk about active trading. Now, before we get started, I do have to remind you that I am not a licensed investment advisor, and I certainly don't pretend to be one here. I'm just showing you information, methods, tools, things that I've learned and used through the years that have helped me with my trading. The big takeaway from the screen that's in front of you here is don't trade with money that you can't afford to lose. Trading involves risk. There's a lot of potential reward that's out there, but there's a flip side to that, which is large potential risk as well. So make sure that you're always trading with risk capital. Today, what we're going to talk about is active trading. Now, in the last lesson, we discussed buying and holding. And when we talked about buying and holding, we mentioned that you need a brokerage account in order to buy and start trading or holding those coins or tokens that you might want to put in your portfolio. Brokerages can start out as something as basic as Gemini or Coinbase, but there are also more advanced options that exist as well that will allow you to trade on margin or trade both long and short positions. So being able to, just like you would in stocks or futures or Forex, you can both buy it, or if you feel like it's going to lose value, you could sell into that falling market. A couple of examples of that are BitMEX and Kraken. Those are great exchanges that exist out there. There's a lot of others as well. That by no means is a complete list. There's a ton of exchanges that are out there, but those are two big ones. There's also Bitfinex. Binance offers margin trading as well, and I think they're just about to open up a U.S.-based exchange for U.S. customers to trade on margin as well. From there, you can either trade directly on those exchanges, or you could utilize a tool such as TradingView, which is one that I use, that allows you to see a more robust view of the charts, add additional indicators that if you would like. There's a lot of paid indicators that you can add to TradingView, and you could do your analysis and trade from there. So a lot of different ways to go. Trading itself does not have to be complicated, and we're going to get into that in just a moment. We're going to talk about a couple of really easy strategies that you can apply right away that I feel like are basic, easy to follow strategies that can make you successful and can make you profitable if you stick to the plan. But before we talk about that, I want to run through a couple of things to remember for crypto, or things to keep in mind, right? First off, this market is totally unregulated. So when I mention in the disclaimer that you should only trade with money that you can afford to lose, that's especially true here with crypto. When you convert your fiat dollars over to crypto, you really have to consider that money as being gone. Now, obviously it's not. You've converted it from a fiat dollar to crypto, but in your mind you have to think about that as just capital that you've disposed of because, and I don't want to scare you, but I do want to be realistic, and that's because there's no guarantee that you're going to get your money that you put in back out. Now, there's not a guarantee that that would happen in the futures market or the Forex market as well, but it's even a bit riskier in crypto, and here's a couple of reasons. One, cryptos can fold up overnight. Government regulation could happen, rules can change, and the governing country or state where that crypto happens to be housed out of, those changes can put your investment at risk, and that currency, that token, that business could be gone when you open the door tomorrow. It can evaporate overnight. Hacks can and do occur. There's no protection against this. If you're in a regulated instrument, a regulated market, there are some insurances that occur back there, and your accounts are tied to you, and there's tracking of how much you have of this and that. There's safeguards for those. In crypto, there is no protection against that. So that's something to be aware of, and you have to take the necessary steps in order to protect yourself, with your online anonymity, with account anonymity, so on and so forth. The other thing that you have to consider is that the coin or the token that you're trading, especially if you're trading in an alt coin or an alt token, is that there may not be buyers for what you're selling. So just like a penny stock, just because it's got some value attached to it, and just because you're selling it, it doesn't mean that there's actually buyers there to pick it up. So there's a couple of things to keep in mind there when you consider that. The other thing to consider is be careful of FOMO. What FOMO is the fear of missing out. Chasing the market in any market is very dangerous, but I think even more so in crypto because it has such steep, fast moves. It's really easy to get caught up and see this, parabolic move or, super just steep, large candle, large bar that makes you go, oh my gosh, I'm missing out on this momentum. I need to get into it. Don't worry about that. There's always another trade, especially if you're trading on an intraday basis. There's always going to be another trade and always another chance to enter the market. Plan your trade and trade your plan. Just stick to it. Stick to the plan. That's what's going to make you successful in the long run. And then finally, don't be greedy. Greed kills. Set some targets to take profit and then do so. Even if you're in for the long term, think through if you've tripled or quadrupled your investment, do you want to pull some off the table? Set some profit targets and then take some of the profit. That's not going to hurt you as long as you're taking profit at multiples of what your initial risk was. All right. So with that out of the way, let's talk about strategy. Just like with futures, stocks, Forex, you need to determine whether you're a short-term trader or a long-term trader. This is going to help you decide what time frame of charts you're going to want to watch or pay attention to, right? You're also going to want to define what short-term trader or long-term trader means to you, because short-term or long-term is subjective. It's going to have a different definition based on who you're talking to and what their personality is. So you really need to think through what your risk tolerance is, how quickly you want to see things taking place. Either you're pushing back to your stop loss and you're out of that trade, or you're pushing into a profitable level that you can continue on with. Really give that some consideration. How much time do you have to spend in front of your trading PC? How much time do you have that you're available to be active in the marketplace? This is going to determine what type of strategy you might want to apply or what time frames you might want to apply your strategy within. All right? So keep that in mind. There are tons of different ways that you can trade the market. There's, every person is going to have their unique take on the way they want to watch or look at the marketplace. If you've been watching any of my videos or past videos, you know that I like to keep things super, super simple. In my opinion, and again, there'll be folks that disagree with me, but in my opinion, less is more when you're looking at your charts. The fewer things that you're putting on the charts and paying attention to, the better opportunity, the better probability that you're going to stick to your plan. And so I like to keep my strategies very simple and based on the mathematical probabilities of success over the long term. So here's what I'm going to do. I'm going to show you two simple strategies that you could apply right now. So let's go ahead. We'll go over to TradingView, and we'll just have a quick look at what these strategies might be. Now, the first one is a support and resistance trading strategy, just exactly like I talked about in Trading 101 and exactly like I've shown you in the live trades that I took on Facebook and presented out there in the futures market. Support and resistance. You don't need a lot of fancy indicators. All you need is to look at things on a couple of different levels and determine where you think price might stop or struggle based on historical levels where those things have occurred. So what we'll do is we'll just look at the Tron USD. So this is the TRX USD pairing, and in TradingView, and we could do another lesson on setting up TradingView and applying it your specific brokerage and all that to it. But for now, don't worry about anything other than the charts, because we're just going to talk through the quick lesson of how to apply a trading strategy to this marketplace. So the way I do it is I like to start by looking at a 4-hour. So I'll look at a 4-hour chart and I'll get an idea of what the trend is on a 4-hour period. So looking at the 4-hour period, it looks like we're in a bit of a downward trend over the last few days now with TRX versus the USD. It moved down pretty heavily, flattened out, moved down pretty heavily, flattened out. So what we would do is we would look at this, and we could do a line study. So we could draw some line studies on here in order to see what things where things are happening. So, again, drawing lines on your chart is fairly subjective. I look for points where we've got touches both to the top and the bottom. So draw a line across here. We can see that price had moved up to here, struggled, rejected, moved up, rejected, moved up, rejected, broke through it and pushed on, came back. It struggled a little bit here again. We just see struggle around this area. So we have multiple touches over many, many days where we've got this point being respected. We could draw another, down here and see. So we could put some lines in the chart and see where price has been struggling, and then based on those areas, we could say, okay, great. Here's another level right here. We've got right here, basically at 30, 31. So we could say, okay, price has broken through this on a 4-hour level. We're in a downward trend. So what I would do is at this point, I would wait for price to pull back up to this level, and then I would sell off of that. Now, if price, breaks through it, then I'll be stopped out, and I would put my stop maybe up here. Oops. Look at my stop point up here. And if price breaks through that, then I would look for this as a pullback point to go long again. But we would use support and resistance to identify potential areas to trade from, and then trade primarily with that downward trend. But of course, if the line or the area that you've identified under 4-hour is rejected, meaning you've broken through it, we come back, we touch, and we set our stop loss at the next level up. If that area is not adhered to and we get stopped out and it closes above, then we're going to want to flip our trade and look to take it long at that point. But it gives us an opportunity for areas to trade from by looking at this longer term. Now you can look at the longer term, and then you can drill down into even a shorter term to see, okay, on a 30-minute time period, am I seeing price struggling even a bit more? So like right here, we've had this big push down. Price is struggling right around here at this 28.028 level. We might even look at a line here if we're going to trade a shorter term and see if this level gets rejected. And if it does, we could maybe take an intraday trade back up to this. But my primary trading point would be to look for this intraday trade to come back up to this 4-hour period, 4-hour line point, and then short it from there, because that's the direction that the current shorter 4-hour trend has been following, right? So that's one way to go. Another way to go is a very simple breakout strategy. So with the breakout strategy, I really like it better on a daily if we're looking at a breakout strategy, but you could apply it to almost any time frame. But if we were to scroll out and go to a daily time frame here, what we would do is we would simply look for days when we've got a smaller daily average trade range than normal. So, for example, we've got, these larger trade days. Here we've got a little smaller range. And what you would do with that is you would just simply, when that day closed, you would park a buy trade at the top, a stop loss at the bottom, a sell trade at the bottom, and its stop loss at the top. And what you would look for is the next day you would want to see if price breaks through the top of that previous high, and at that point you're going long. If price breaks through the bottom of that previous day's low, then you're going short. And they're very simple breakout trades. Understanding, however, there are going to be days when it might break both sides of that. It might break out to the long side and then break to the short side. And you could potentially and it could close back in the middle, and you could be stopped out on both sides of that trade. There's risks and there's pros and cons to every single trading strategy. There's no trading strategy out there that will give you a 100% win rate. there simply isn't. The biggest thing is to manage risk, and we've talked about that in Trading 101, and I'll do some more on risk down the road, because after I finish these first initial lessons, I'm going to do some live in the market trades. We'll do those either on a Facebook Live or a YouTube Live, or maybe both, and we'll apply these things that I'm talking about here in the actual live marketplace. But at any rate, the breakout strategy, very, very, very simple. Again, all you're looking for, and you could even do it on any time frame. You don't even have to wait for the smaller average trade range. However, I feel like you're going to take fewer trades, but I feel like you have a better opportunity for success if we wait for a day where we close with an average trade, with a trade range for the day that's smaller than the average. And you're going to need some tools to be able to manage that. You can either do it yourself and log the size of each of the day's bars from high to low, and determine what the average range is for each of those currencies that you may be watching, or you can get a tool that does it for you. But at any rate, look for that day that's smaller than average, and then simply enter a buy at the top or a sell at the bottom, and let the trade go. Again, you do want to have stop losses, and your stops are going to be a bit wider, because they're going to be your buy stop is going to be at the bottom of that previous day candle, and your sell stop is going to be at the top. So you're going to have more ticks or more pips of risk than you might on a regular intraday trade, simply because you're using the whole candle size or the whole bar size. That's okay. You're going to trade smaller lots in order to keep your risk consistent and keep your risk at that 1 or 2% level. But at any rate, we'll get more into these as we start doing the live classes, but this is a really, really, really simple trading strategy that you could implement right now that does give you a good success rate. With both of those systems, you do want to think through your risk-to-reward ratio, and your risk-to-reward ratio should be something that's at least 3 to 4 times your risk. So, for example, if we had a risk of 200 pips, you might want to take your profit at a minimum of 600 pips. So keep that in mind. And the same, with your breakout, with your support and resistance strategy. You're looking at a 3 to 1 or 4 to 1 risk to reward ratio, to where you're winning significantly more than you're losing, with the understanding that you are going to be losing trades. That's just part of trading. You can set yourself up to where you give yourself an advantage, and that's what we're doing by looking at trading with the trends, or looking at these breakouts that have a high potential success rate. But don't get too caught up in worrying about your overall wins. I mean, as long as you're winning 3 to 4 times of what your risk is in the long term, that's going to play out for you. You could almost flip a coin and make that work. So that's it. We won't go into too much detail right now about this, but it is something that's pretty darn simple. You don't have to spend a whole lot of time on it. Just think through how much time you want to spend in the market. Find a simple strategy. Use risk-to-reward ratios that give you the mathematical advantage, and then go on your way. Trade that plan. Think through where you're going to take profit. That's a big piece of it. Mindset does play a big part in being able to trade consistently. Folks hate hearing about mindset because it puts the onus back on you. Many people aren't comfortable with taking responsibility for their success or their failure. Mindset is everything. Mindset is what's going to determine if you're sticking to your plan. Mindset is what's going to determine if you're managing your risk properly and not getting into that fear of missing out, or not getting greedy on a trade, trying to just eke out a little bit more. Mindset is being comfortable with understanding that we're not always going to call the very top or the very bottom of the market. Mindset, it's a big, big, big piece out there. Consistency in the application of your trade plan is key to long-term success. I'm not going to go into a ton of mindset training. I do have a resource that I can offer that to you if you guys would like more on it, but it is something to keep in mind. Trading can offer you amazing possibilities. Just keep in mind it's a tough road to get there, but once you get it down, you can be successful. I know you can be successful. Not trying to be overly positive with that, I'm just speaking the truth. Mindset will get you there as long as you're consistent. So in summary, what you need is a brokerage account. You need a trading platform. So a brokerage account being BitMEX or Kraken or something similar to that offers you the ability to go long and short. You need a trading platform. Again, you can trade directly from those, or you can utilize something like TradingView. TradingView offers additional indicators, which I didn't go into, and I will maybe at some point when we come back to looking at these live in the market. I do have an indicator down here that's on my trading platform. It's called the Megalodon indicator, and it provides me with some pretty cool information, especially when you come down to the shorter term periods and look for potential buys and sells. But we'll get into that later. There are indicators that you can purchase. This is a Megalodon is a fee-based indicator, so I purchased the rights to utilize that in my daily trading. There are indicators that you can purchase that will give you signals of when certain things are happening in the market, or it's looking like there are buying or selling opportunities. We'll get more into that as we come to the end of this crypto trading lesson series, because we are going to get into some automated and bot style trading platforms, and I think some of these indicators that give you buy sell signals probably fits more with that discussion than it does with this one, or it's a kind of a combination of the two, but those might make more sense after you get involved here and start playing around and looking at the application of some of these simple systems that I have just talked about. So anyway, we need a brokerage account, we need a trading platform, we need a trading system. So I just gave you two that you can implement, and we'll see those implemented live as we do some Facebook Lives here following up to these lessons once I wrap up this current course plan. And then the last thing you really need to have is that positive mindset. And again, not being, positive to the extent of it's unrealistic. Positive mindset meaning that we're doing some self-reflection. We're looking at what we did well, what we didn't do well, and then finding ways to continually improve. And that's going to help us stick to that plan, keep ourselves in the right mindset that'll help keep us pushing forward, understanding that trading is going to take a little bit of time to learn, but once we learn it, it can make us wildly successful, and that's the goal, right? So that's it for now. Tune in soon for our next lesson. I'll see you there. Bye.